Hi, my name is Brad Smith, and in this video we're going to cover how to present full mortgage payoff. This is not going to be product specific. It's really going to talk about more about the concepts of full mortgage payoff and how to explain the options to a client. As far as what product to use, that's really going to depend on the client's age and health and that kind of stuff. But as far as how to explain options, that's what we're going to go over in this video. And where I'm going to start in this presentation is going to be assuming that you've already built rapport, you've already had some conversations with the client. Let's say the client's name is John and Mary. And John is 40 years old. Mary is 39. And let's just focus on John for right now, just to go over how to explain things. But John has a $100,000 mortgage, 30-year term. He's paying about $800 a month on his mortgage. Okay, and you've already gone through the qualification form, verified medications, verified the health information, make sure you have the right birthdays, all that kind of stuff. Then you've slid the paper across the table, that form that they filled out, that lead, you're going to slide it across the table and ask them, why did you fill this out? What's the main concern? What does life look like for you guys if one of you were to pass away? John, if you passed away, what would the situation be like for Mary? Mary, would you have enough income to stay in the home? Would you have to sell it? What would your options look like? You've already kind of done all that stuff. And now you're ready to go over their options. So I'm going to say, okay, John and Mary, based on what you've told me, based on your main concerns, based on your age and health, I've got over 40 companies, 40 insurance companies I have access to that have products for mortgage protection. And what I'm going to do is recommend the very best options for you guys. But before I do that, I want to go through what options are available, and you tell me what you care about and what you could care less about, because I don't want to go over pricing, all that kind of stuff on things that you really don't care about. So the first option, this looks kind of like a wedding cake. Okay, so there's different layers, and these are all options. Now, each option is going to cost a little bit more, so we only want to pick the stuff that you care about. The foundation, or the bottom of the cake, is a death benefit. Okay, now the way that works is if one of you were to pass away, it's going to pay off that $100,000. Now, this is a level benefit. The reason that's important is because mortgage protection, I don't know if you guys have had mortgage protection in the past, but when you get it through a bank or things like that, it's really a decreasing term, which means it only will pay off whatever the principal or the balance on the loan is. So if you pass away in 15 years and you only owed $60,000, that's all it would pay out. So it's kind of a rotten deal for the homeowner, because you're paying, let's say, $100 a month, but every month that your principal goes down, you're getting less and less benefit. So this is not like that. This is a $100,000 death benefit. So if you were to pass away in 15 years and you only owed $60,000, it's going to pay off that $60,000, and the other $40,000 is going to go to Mary and the kids. Okay, does that make sense? Okay, so then another option that most people add, probably 90% of people, end up adding critical illness. Now, what critical illness is, it's going to cover things like heart attack, cancer, stroke. So things that are pretty common and likely to happen. Now, in my opinion, sometimes critical illness is actually more important to have than death benefit, because it can sometimes be more expensive, as bad as it sounds, but it can be more expensive times to have a critical illness than it is to die, because not only are you not able to work, so you lose the income, but you also maybe have medical bills and other issues. So the way that this works is, I'll just share a story. Now, every layer that I go over, I'm going to share a story. So with critical illness, my story, and if you can make it personal, it's going to be better. So if you have something in your life, think back on anybody that you know of that had a heart attack or cancer or stroke and could have used this, use that story. Mine is, last year in May, my dad had a pretty massive heart attack, and it was a complete shock because he was in really good health. And what happened is him and I were going to be going to Ireland together, and we flew and met in Pennsylvania, and we were going to fly over the ocean together. Well, when I got there, I get in line to Ireland. My dad comes after that, and he calls me as soon as he lands, and he says, I'm not going to be able to go. And I thought maybe it was because he was running late. And I said, no, we got plenty of time. He said, no, you don't understand. I'm throwing up blood. And so I get out of line and I go over to his terminal, and he's in a wheelchair. He's covered in blood. He's got like 10 different people, paramedics, police officers surrounding him. We rush out into the tarmac, not to get onto a plane, but to get into an ambulance. And we go to the hospital. He lost about half his body weight in blood. He had to have 3 blood transfusions, and it was all because he had an internal stomach bleed. And that put so much stress on the heart that he ended up having a heart attack. He had a pulmonary embolism. He had to have a pacemaker put in, had to have a stent put in. So all in about a week and a half, there was about 3 times we thought he was going to die. And again, it was a total shock to us. So if he had had this product, the way it works is if he had had this product, just by having that event, they would have paid anywhere from 25, 50%, or 100%, depending on which one we select. They would have paid that of the $100,000. So it doesn't have anything to do with whether or not you can go back to work. The great news is my dad was able to go back to work 2 months later, but not because he should have gone back to work, but because he had to financially. He really should have taken about 6 months off to recover. But if he had this product, let's say he had the 25% option, they would have written him a check for $125,000. If he had the 100% option, they would have written him a check for $100,000. Okay, so now statistically, 1 out of 3 women are going to have a critical illness in their lifetime, and 1 out of 2 men will have a critical illness. So John, between you and I, one of us is going to have a critical illness. Now you're only 40, but you got to remember this is a 30-year mortgage. You're going to be about 70 by the time this mortgage is paid off. So you're obviously more likely to have a critical illness, in the last 10 years of this mortgage than you are in the first 10 years. The second tier is disability. John, do you have disability through work? And most of the time, people do. But if they say yes, I'm going to say, do you know what the percentage of your income that they'll pay? And it's usually 60% or less. And I'll say my wife is, she works at the VA hospital. They have the best benefits out there. Hers is 60%. So John, if you did become disabled, I'm really glad that you've got that disability income through work. But let me ask you this. If you were to have a disability, would you be able to pay the mortgage, pay all your bills, your food, your gas, all that kind of stuff on 60% of your income? And sometimes they say yes because Mary's still working. But a lot of times they're going to say no. So I'll say, okay, so what they're going to do with this disability is they're going to pay that $800 a month. So if your mortgage was paid for, do you think maybe with the rest of your bills you could cover it with 60%? Oh yeah, that'd be doable. Okay, so that's the way that disability is going to work. And then the last part is return of premium. Okay, this is money back. Okay, so let's just say, for an example, John, that you were going to save money. You guys currently saving any money? And they might be saving a couple $100 a month into their savings account or checking account. Okay, so if you pay $100 a month into an account, okay, into a bank, who do you bank with? Let's say it says Bank of America. Okay, in 30 years, you would have $36,000 saved. Okay, now if you save, let's say you saved $100 a month here, with the return of premium option, in 30 years, you're going to have the same $36,000. The difference is, meanwhile, during this 30 years, you have all of these other options, all these other benefits to go along with it. With a bank account, you don't. Okay, so either way, it's more like a savings account. Okay. So out of these options, and I'm going to word this question very specifically, out of these options, is there anything on here that you don't feel like is important at all? Anything you could care less about that you feel like is just not important at all? Now, almost everybody's going to say, well, no, there's not really anything I don't think is important. And I'm going to say, or do you feel like all of it's important as long as it fits in the budget? And they're going to say, oh, yeah, all of it's important as long as it fits in the budget. Okay, so let's do this. I'm going to go over the options, and I'm going to start with all the options, but I want you to tell me if it doesn't fit in the budget, because I don't want to show you guys stuff that, have you guys apply for something and even if in 3 months, 6 months, a year from now, if it's not going to fit in the budget, it's not going to do any good to have it for a little bit and to cancel it. Okay, so whatever option we pick, I want to make sure that we're going to pick something that gets you the coverage that you need, but also is going to fit in the budget. Okay, so just tell me if something doesn't fit. Just tell me. Okay, so the first option is going to be all the benefits. Okay, that option for you, John, is $95.20 a month, and that's with you getting, getting the return of premium. So in 30 years, you get your money back. Does that fit in the budget for you guys? Now, if they say yes, that fits in the budget, I'm just going to circle it and start filling out the application. I'm not going to show them other options. But if they say, I'm not 100% sure, and I'll say, okay, let's look at another option then. This one would be the death benefit, the critical illness, and return of premium. Now, if they tell me that they'd rather have disability than critical illness, obviously I'm going to do that option. But most people, the disability is the first to go. So, okay, that option is going to be $79.29. Is that more comfortable? And if they say yes, I'm going to circle it and go to the application. If it's still not comfortable, I'm going to say, okay, which of these do you want to take off? Do you want to take off critical illness or return of premium? Oh, I like the idea of getting my money back. Okay, so let's do death benefit and return of premium. And that option is $70.05. Now, worst case scenario, that still doesn't fit. Okay, the primary concern is the death benefit. That option is $47.88 a month. Okay, so out of these options, John and Mary, which one do you feel like A, gets you the coverage that you really need, and B, comfortably fits in the budget? Not a stress, not I think it'll fit in the budget, but comfortably fits. I really think this first one, that kind of covers all of our bases and it fits in the budget. So I'm going to circle it. I'm going to fill out the application. Now, notice I didn't say, do you want to fill out the application? Do you want to apply? Do you want? See, those kind of questions are yes and no questions. I don't want to ask a question that could lead to a no. I want my questions to always all be yes answers. If I say, which of these 4 options gets you the coverage you're looking for and also fits in the budget, it doesn't matter which one of these 4 they give me, they're all yes answers. So make sure that you're wording your questions in a way that would always lead to a yes answer. And then, of course, you're going to go right to the application. Great. Let's fill out the application. And that's it. So hopefully that helps.